Bum 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 bum. Hey everybody, Facebook, YouTube, how you doing today? Yes, this was just a little bit of a song that I put together here just recently on the guitar, seeing if it's comes to anything. I play around a little bit. But anyways, here you are. This is your live real estate show, talk show. And I always oh my God. Yeah, this is one of those days I come in a little bit nervous, but this is a show that I bring you for an opportunity for you to join us every Wednesday at noon. Come here, ask me questions about real estate, ask me questions about life whatsoever. Join in the conversation, throw in a subject we normally don't talk about it. But hey, I'm always open here, open door for you to join us every Wednesday at noon. I'm hopefully noon is a time where you're maybe at work, but taking a lunch break, and you can join, entertain yourselves while you eat, and have a conversation with an old buddy of yours, John Correa, Juan Carlos Canali, whatever. You join me and have a little bit of fun, talk a little bit, learn some information, and by all means, this program, this show is all about education, sharing news with you, and being as transparent as possible. Wow, last week was awesome. I hope you guys tuned in last week, September 1st. We had an announcement that We Insure Around Town is in town for writing up your insurance policies for homeowners. Auto, any vehicle you want, motorized vehicle you want, they are available, and also the umbrella. I haven't heard many questions about it, and I was hoping that somebody will come out and ask any questions, but also if you tune into that video, you'll be able to get the contact information, the right contact information to answer your questions about insurance. Okay, so hopefully you got to listen up last week, and it was really awesome. Our team is now, We Insure Around Town Property as well. Again, trying to develop this umbrella where we're going to offer you all types of real estate services in-house. Okay, so you don't have to go anywhere else. You stay with us. Okay, and we'll be able to serve you with trust and honesty and the ability to serve the best way possible. That we're all about customer service, guys. So anyway, so this show today is awesome. There's a couple of things that I want to talk about, and I'm going to pull up some screens here to help me out as well. Again, there's no script whatsoever in my shows. It's always live, but I do put together some material to share with you, and I go from there. But again, it's also real nice. It's the beginning of the month of September. I think it's the last month of the quarter. It's important to know a little bit of an update from us in the real estate market, and how does Houston been doing for this year, right? So I'm actually going to go back into August of our last month right now, and give you a couple of cents of what's going on right now. Okay, so this is from the HR chairman, Richard Miranda. Okay, so he quoted this on the Houston Association of Realtors newsroom. He said, Houston housing market is beginning to show signs of easing, which was to be expected with summer behind us. Schools back in session, inventory levels still exponentially low, albeit improving. Yes, we have been seeing improvement where, more inventory, more and more inventory has come into the market. But then again, we had record highs in June, record highs in May, but then again, it slowed down again. The summertime, kids going back to school, it is normal. It's a seasonal thing where, the market kind of slows down a bit. Okay. Well, we focus into vacations, our last vacations we can take with our children. And then we refocus in getting the materials ready for school. We refocus in getting them to school. And sometimes some of these people have already purchased homes, right? Because they've planned before the summer ended to be in a new home so they can register their kids into their new schools. So yes, we're following some slowdowns here a little bit, but it's kind of expected in every market. We're also hearing, oh my God, look at this guy's word. He's saying, I'm going to need some help here. Anecdotally. What is this word, man? Hold on a second. I have to check this out. This is a little bit weird for me. Hold on. Okay, so how do you pronounce this?
Anecdotally.
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 According to or by means of personal accounts rather than facts or research. Wow, anecdotally. See, we're always learning here. Have you heard this word before? If you have, please let me know. If you don't, just make some comments about it. It'll be great. And anyways, let me remind you to always try to support me, man. I have, like I've been telling my friends this weekend, I get a lot of my friends that send me a text and say, hey, man, great podcast today. But they never go in there and subscribe. Come on, guys. Come on. Please go into my YouTube channel. I'm going to later on put it in my description where you can find my YouTube channel and support me, man. By subscribing to my channel, you get all the updates from real estate from somebody that you know. And like it, dislike it, and criticize it, man. I'm always open for that, okay? I'm looking forward to interacting with as many people as possible, bringing you the best content that I can, okay? Yeah, don't crucify me if I'm not always the best, okay? But, you know, come on, join me, talk to me. Make me look bad if you want to. I don't care. Just join me, all right? Okay, so he's saying here that we are also hearing anecdotally that there aren't quite as many competitive bids on property listings as we observed early this year, which drove prices into record territory in June. Okay, so we're having a little bit more inventory. Now we slow down a bit on the bids. So in other words, homes that were getting 15 to 20 bids or offers, they're now lower than that. The norm was typically 3 to 5, I think, in the best case scenarios. And I can relate that in the past 3 years, taking away COVID, taking away this year, which, we're still COVID extended as far as real estate goes, right? But here you go, man. Look at this. Is pretty interesting, and I'm going to touch on something that I just actually thought of. The June close to original list price ratio. So that's a ratio close, homes that sold to original list. Okay, for single family homes was the highest ever recorded in June. Highest ever, and that is 100.3%. So in other words, offers were coming in, purchases were being made 100.3% over the original asking price of that particular home, for the single family homes at least. Okay. And it also says with the majority of buyers paying above list price for homes on the market. There you go. The majority of buyers paying above list price for homes on the market. So if you've been watching my shows, I've been talking about it all along. You know, I think I started the show right when this thing was really, really hard for a buyer's agent out there to represent their buyers the right way. But it was really not the buyer's agent's fault for the most part. You know, if you have buyers not unwilling to pay for more than asking price or can't afford it, yeah, you're dead in the water because there's plenty of competition out there. Okay. But anyway, so I want to I've seen a Facebook post the other day, and this is like, I don't know if it was Real Estate Mastermind or was it the HAR Platinum Forum on Facebook, one of the groups I follow. Okay. He posted something quite interesting, and I'm going to try to kind of make an example verbally to you. Okay. So right now, there are a lot of people that are concerned on purchasing homes because they think the home prices are too high. Okay. They feel like the market will drop. Okay. Well, so let me put it this way. So while the market prices are much higher, and we've seen these increases over and over through the year and last year as well, and well, we have one of the greatest incentives to purchasing a home, which is the low interest rates. Okay. However, here's the tendency that you should expect is that as the market cools down or the economy gets better, well, the interest rates are going to start rising. Okay. So again, we talked about it on different shows where interest rates is also tied in with job counts. So if the current administration is able to have more job creations here in the coming months, likely interest rates are going to continue rising. And they have to eventually rise, guys. This low point is not going to stay for long. It has to rise at one point, okay? But I want you to look at the difference here. And this is what I'm going to just quote this real fast, okay? So let's just give you a simulation. You bought it right now at the very high point. Let's just say, hypothetically, you are right. The prices are going to drop. I have a ton of people that believe that it will not drop, okay? I must say that. You know, there's Alex Song, he had a video. He works for Lennar, the builder Lennar, and he had a video come out. And it says, buy the dip, right? Because you can see the dips and then you buy it here, but it will continue rising back again, okay? But in contrary to that, let's say hypothetically, the prices are going to drop. You bought it at the highest peak of the market, and later, a year later, the prices drop. Boom! Come down, okay? Well, here's the deal, right? So if you were buying a house right now at the very top of the market at 350, while your interest rates are in the 3%, conventional 30-year fixes, okay? In the 3%, so 3.125 or somewhere in there, okay? Even if you were able to buy it down for even lower, it doesn't matter. Let's just say it's 3% right now. You bought it at the very top of the market at 350. Okay, let's say 2 years from now, it goes, that same home now goes down to 300. And you're like, oh my God, I lost $50,000. I didn't gain no equity. But here's the deal. If you were to wait, let's just say you were to wait and say, you know what, I'm not going to buy at the top of the market. I'm going to wait until it drops to the 300,000. You were the smart butt guy, the smart ass guy that boom, bought it at 300,000 instead. But look at it this way. I'm simulating it here. 2-3 years from now, you waited. You're still renting. Or, I mean, let's just say you're renting, okay? So that money, you know where it goes. You're buying a roof over your head. That's fine. You're not wasting money, but it's not reinvested it back to you either, right? But let's just say in 3 years from now, you bought it at 300, but the rates are no longer at 3%. It's a 4.5. You guys just go ahead and do the math. Your mortgage payments are actually lower today at a higher price point than it would be 3 years from now. So if most people, I know this, I'm in sales, man. Most people, they move and they budget based on their monthly payments. Yeah. Because of what you can afford every month. You know how much income you make and and how much you want to spend in the house or can spend in the house or qualify to spend in the house, right? Well, so let's put it this way. You guys do the math. $350,000 today at 3% is somewhere about 1,200 and change, somewhere in there. And then 300,000 at 4.5% is going to be like 1,400 and change. So, yeah, I don't think I'm wrong. I don't think this guy was wrong. So pay attention, guys. Yeah, don't be get the better rate. Get the better interest rate, okay? Because everything in real estate is a wave. If it drops, it will come back up again eventually, all right? We need to trust the strength of our economy a little bit better, guys. I've been at least on a full circle of this economy where I was an adult and I paid attention and I was in business and I can tell, especially in this industry, I've already been a full circle of a 10-year circle. Actually, I'm going into my second circle. 20 years almost in real estate. Okay. So actually, I mean, it might actually be 20 years right now. I started it. Yeah, it is. I started in 2001. Yeah, 20 years. I've seen 2 full circles, okay, of ups and downs in the real estate business. It turns it back around in the same way it was before, or better. And every time with inflation, you see prices much higher. I never seen prices way below. I mean, the recession we had in 2008, 2009, that was pretty bad. That bubble was too extreme, and it did affect a lot of folks out there. But I know there were a lot of you that, oh my God, my house is worth less than I owe on it. Let's kick the bucket. Yeah, and a lot of you do it. You could have still afforded the payments, but you decided to kick the bucket instead. All you had to do is wait. All you had to do is wait. I bought a condo in 2009 for $80,000 that originally was sold for $260,000. Guess how much is now? Again, back at $260,000. So you know what I'm saying? That's what it is. Okay, you got to look at it that way. All right. Sometimes talk to me, call me, let me know what you think. Okay, let me know what you think we should be talking about it here. But anyway, so that's the HAR news. So things have slowed down a little bit, more inventory on the market. However, the biggest issue that we, the loan originators and real estate agents, have had for the entire time of 2020 and 2021, this is actually an issue that needs to be fixed, and I think the lenders are trying their best to fix, is in the subject of appraisals. Do y'all know what appraisals are? Well, it's an evaluation of your home, right? You send somebody that is licensed to evaluate your home. They use a method called cost approach. Okay, so they do a market analysis, comp analysis of your home, and figure out what your home is worth. And an appraisal is a document, a report that is used by the lenders in order to finance your home. Okay, so it's a requirement. If you're financing your home, it's a requirement to have an appraisal. Now, I'm not going to go into details. There are other methods other than appraisal available out there. There are financing programs and the LP findings that are sometimes says you don't need an appraisal to finance your house. That does come across, forgive me. So we do have that sometimes happening. However, very limited in certain situations, okay? But certain situations only. But appraisals have been an issue. And I can tell you this, back in the 80s, appraisals cost the consumer, the buyer, the borrower, about $350 to $450, okay? Now, these appraisals are costing you about $500 to $700, okay? However, out of those $600 to $700, $500 to $700, $300 is going for the company that hired the appraisal. So see, back in the days when I first started in the mortgage business, appraisers were independent. They weren't required to have a supervisor above them. Okay, they were essentially they got a license. They were able to perform as an agent, okay, as an appraiser. Then things changed. We found that there were a lot of misuse of those licenses through that recession, the bubble that burst. Part of it was the appraisers that were involved in it. Okay, a lot of fraud happening. So what they did, don't quote me on this if I'm wrong. Just test me out here. So what happened is, if you're a licensed appraiser now, you just got your license, you have to put it under a supervisor. And each supervisor can only have up to 4 appraisers under him. So he kind of started limiting appraisers there. And then, which was okay because it was meant to make the integrity and the make the capacity, the competency of an appraiser better. So in other words, if you just got your license, you can't just go out there and do your thing without having somebody with more experience. Okay. Well, that's besides the point that I'm getting at here. The biggest problem we're having, and this is national, this is nationwide, guys. This is appraisal issue happening everywhere. Well, the cost of becoming an appraiser is pretty high. And now appraisers are somewhat making less money because they're giving a portion of their appraisal fee now to the supervisor, the company that hired them. So we're having a major shortage of appraisers in the market. Major shortage. So what's happening is, for the longest period, we've been trying to have these lenders perform at a record speed by being able to underwrite a file and fund on the loan quicker than ever. I'm used to the 45 days, the 30 to 45 days turnaround time. This is an era that I came from, okay? But now lenders are able to close in 15 days. They have the staff. They have the software, the technology. They can fund on a loan in like 15 to 20 days. I've seen it that quick. So, I mean, usually your real estate agent is putting 30 to 45 days on a contract, not even needed anymore, but it is because of the appraisals. We ran into that issue now. We ran into the issue that we have a shortage of appraisers. So whenever you enter a loan into the system, your lender sends an order to their lender's approved appraiser list, which is another thing that happened. Now you have a blacklist for appraisers and you have a good list of appraisers, and the appraisers preferred by the lender that you're submitting a loan to. So then your loan officer or their processors order that appraiser out, and they have to wait until the appraiser company sets a schedule to come out and inspect the property. Okay. And then once they inspect the property, we have to wait until they generate the report. Okay. Well, I've experienced a time in which appraisers went out there in the same day of the next day of the order, and they gave you the report 2 days later. I experienced that before. Now it is now taking 10 days to get to the house, and then maybe 2 or 3 days or even 5 days later to get the appraisal. And that is if your home gets scheduled within that 10-day window. And that is if the loan originator team, the processor, had everything in their hands to feel comfortable in ordering the appraisal. Remember, guys, you order an appraisal, sometimes they have to collect the fee from you right away. Okay, so there is a great risk here to order appraisals immediately, but most of the lenders that I know are doing it. They have to, because that could be the number one reason why your home has delayed in closing. And I mean, your realtor among yourselves, the consumer, is pulling hair the same way, because you have a contract you don't want to default. You have until that on or before date to close. But 9 out of 10, the appraiser's been the issue, let alone finding an appraiser sometimes. So I think the lenders are aware of the situation. As a matter of fact, I work as a loan originator. I work with one of the best banks, don't forgive me, lenders of the nation. And they are definitely on it. They're on it. They're trying to figure out the best way to resolve this issue so we can get back to our 20-day closing, or not lapse the closing date of that contract. Okay, very crucial. So again, it's if you're listening up, maybe it's an opportunity for me to encourage you. If you are thinking of a career career change, this might be a good opportunity to become an appraiser and joining a preferred appraiser company, or even working yourself of becoming a supervisor, because you're always needed in a real estate transaction, especially if there's financing involved. So I encourage you, if you're thinking of a career or thinking of changing a career, please become an appraiser. Look at it. You can make good money at it. You can make really good money. You can definitely make good money on it. Okay, just think about it. Just think about it. There are 30 days a week. If you can do at least 20 appraisals a month, okay? Again, you're not working for a single lender, you're working for several. So if you just had 20, and let's say you make $200 per appraisal, that's for $1,000 a month. That's a decent salary, guys. That's a decent salary, $4,000 a month. And that's just if you get paid 200. I'm talking about maybe 300 out there. There may be 350s and 400s. And it may be more than 20 transactions that you do a month. See what I'm saying? But anyways, this could be also your side job, something that you're not full-time. Maybe you don't get the 20 transactions a month, and you're making $300 per visit that you got to do. And believe me, it's not a whole lot of work, guys. It's not a whole lot of work. All you have to do is drive to the house, make sure the house is there, make sure the conditions are as stated on the contract, its conditions are stated on the report. Then sit your butt on a computer and then just go look for comps and use the software that helps you put it all together. And then you generate a report and send it over. Simple as that. Okay. So yeah, please think about it, become an appraiser. And lenders, if you're listening up to this, I'm counting on you to fixing this issue. Or the state, or the commissioners. Guys, track, please. Let's figure out a way to get these appraisers to get on board here, man. We need to hire more appraisers. And that is it for appraisers. Any questions, guys? You are always welcome to reach out to me. I'm always looking at my live comments. I don't see anything here yet. But if you can shout out to me or say something, I have left a link here that you can join the meeting and then interact with me in person. Okay. Anyway, so I have something pretty exciting. I'm going to now share a screen for you. I'm trying to do every month the product loan type of the month, or I might change the name, the loan type of the month. The two products that I think they're going to be hot, they're good to share with everybody. And then you can tell your friends. In my platform here, in my Facebook viewers, I have some Brazilians and folks that live in Brazil, in South America. And I think that may be an opportunity to share some of these products with you. I have two nice products of the month. I'm going to announce it right now by sharing the screen, and give me a moment there. Yes, sir. Yes, sirree. Where is my Zoom thing? Oh, here it is. Okay, found it. Okay, share a screen. And that is the PowerPoint. Let's see here. Share my PowerPoint. There you go. There you go. There you go. There you go. Let's see. Slideshow. From the beginning. All right, guys. So again, I'm with Around Town Properties, Houston, a new home team. Yes, sir. Our brokerage license number is 901-0116, and we are. Oh, forgive me, guys. Baytown is calling. I'm going to turn this out. Sometimes I forget. Sorry, guys. Around Town Properties, ATP. Again, last week we announced that We Insure Around Town is also in town, and we can now help you with real estate services and insurance. And me, particularly, I'm a loan originator as well. So I am also with Model Mortgage Gracemark, and my company, my brokerage's license is 1904896. And oh my God, this ugly guy here in the screen is me, your one and only John Canali Correa. My license number for the real estate side is 628-718. My license for the loan originators and NMLS number is 1984859. What's up with me and the numbers today? Just I don't have my coffee with me. I'm missing my coffee here, guys. Anyway, so yes, this is the ugly guy that you need to call whenever you need real estate services, whenever you need a loan origination, you need to apply for a refinance or purchase a new home. This is who you need to call. I try to smile sometimes. Sometimes my smile is just not that handsome. Okay, but yeah, and then why I'm telling you my licenses is because I wanted you to know that I'm in the capacity for talking about these products. Okay, I'm in the capacity of talking about financing here. Yes, sir. And I have two products that I want to bring to your attention. Okay. Boom. The first one is foreign national loans. Foreign national loans. And this is what I was talking about before. You know, a lot of South Americans that I know are in my account, my Facebook account, and my subscribers. If you're in Brazil, if you're in Mexico, if you're from Venezuela, poor Venezuela. If you are in Bolivia, Colombia, Peru, Chile, yes, South America, I have a foreign national product. Okay. I know a lot of lenders do foreign national loans, but not every one of them is as good, I'll say, right? Some of them are going to require a higher loan down payment. I've seen as high as 50% down payment for you to get a foreign national loan. I'm used to the 25s and the 30s. Although I've done loans at the 50% down payment because it was a requirement to do. And some have strict rules and some don't. You just let me know. I have the solutions for you. But this product just came back with one of the lenders that I work with. And it's a product for foreign nationals wanting to purchase or refinance a home in the United States. Okay, so this means that this loan is incredibly easy to do. Okay, because the DSCR program has a 1-to-1 ratio on cash flow, no income or U.S. credit required to qualify. So these products are strictly for somebody that does not reside in the U.S., but they are interested. They have business here, and they're interested in a second home or an investment property in the U.S. Okay. The minimum loan amount is $75,000. The maximum loan amount is $1.5 million. Okay. So Houston, particularly Houston or Texas, Austin, we have a huge influx of CEOs, business people in the oil and gas industry. I know, for instance, even I'm going to cite just first name Rafaela here, somebody that I went to elementary school in Brazil, first, second grade, third grade. She became a geologist and worked for an oil and gas company. And they were constantly, traveling her to America here in Houston. So I ended up being able to meet again a elementary school friend, which is quite amazing, right? But let me give you a scenario where you have a business that uses America as logistics, and maybe you're exporting products from another country, Taiwan or whatnot, and it's just logistically better to transfer it here. So you have a warehouse here, and it requires you to come to America often, or you like to vacate in Houston, or whatever it is you want to invest in America. You have an opportunity now to finance that home. You don't have to come out of pocket all at once. Okay. The asset sources and seasoned assets sourced and seasoned for 60 days. So that means that whatever assets that you're presenting on the table, the 30%, looks, it's a 30% down payment. Whatever assets needs to be sourced and seasoned. In other words, if you're going to show a bank account from the country of origin, wherever you're showing the bank account from, that money needs to be sourced and seasoned. In other words, if it's shown that you just recently, forgive me, if you just recently deposit $60,000 in that account, you're gonna have to show where it came from. Okay. We don't want any cartel money in it. You see what I'm saying? Okay, so so assets needs to be sourced and seasoned for 60 days. Must be in a U.S. federal bank account, insured bank for a minimum of 30 days. And you need to have, this is a little bit weird, okay? So I have to question this a little bit because you can have source for 60 days. It needs to be in the bank for a minimum of 30 days, but you need 12 months reserves in the U.S. bank for 12 months. You need 12 months reserves in a bank account. Okay, so you need 12 months. Okay, I got you. I understand. I just cleared it myself. Okay. So the money that you're using to put 30% down plus closing cost, okay? Plus the money that you need to show in reserves. 12-month reserves is 12-month worth of payments. They want to know that you have the next 12 months of mortgage payments in your bank account already, besides the money you're going to use to put in down payment. Okay. So in other words, if you're buying a house for $300,000, 30% of $300,000 is your down payment. And the bank is going to finance the 70%. Okay. So assets needs to be sourced for 60 days. So if it's shown that it had been deposited recently, you need to show where the money came from. Okay. So in other words, they only require you to have that money in the bank account for 30 days. So if 55 days ago you just deposited that money, you're going to need to source it where it came from. And I have all the methods to go around here a little bit on this, but the program is very clear. You need to have 12 months reserve in your bank account. Okay. So when you're transferring the money, you're not just transferring your money, you're 30%, you're transferring 30% plus 12 months of mortgage payments there as well. Okay. The payment must be set up on a auto pay through a bank, the same bank account that you've shown to have the 12 months. So in other words, all the money needs to be in the bank account here in the US. Okay. You should consult your accountant, to your attorneys to figure it out what's the best way to transfer that money to the US. Okay. But give me a call. I know some people that I can introduce you, some attorneys, some accountants that I can introduce you to make these things a lot smoother for you. Okay. No sanction listed countries allowed. So we're going to have a list of countries that we do not allow you to purchase from. Okay. Cannot reside in the United States. In other words, this house is not for primary purposes. Cannot. Okay. But you won't need to show income or US credit. So they're going off of likely just off of your 12 months reserves. This product is likely going to request some references from you from Brazil, like a bank letter or a utility company that you have business with. Yes, and we're likely going to have to translate those letters if they're not written in English. Okay. Back in the days, the other banks that I used to be able to do foreign nationals with, they will allow the funds to still be in South America while we're in transition to financing the house, but they would require you to translate a bank statement. Could you imagine how expensive it was to translate 12 pages of a bank statement? Yeah, it's terrible. All banks statements here It could be a printout from your US bank, so just a PDF. They don't need to be the originals, but the letters of references, I believe maybe they do have to be original. I would prefer that you do DHL, FedEx Express to me, a original letter anyways. And you must have an eligible visa. All right. So if, I mean, really, if you're doing business in US, and so much so that you're interested in purchasing a home, you need to have valid entry in this out, a valid visa to get in to the US, right? To service the house, to visit at least once the house, or whatever it is, the purpose is this. But this is a list of, oh, forgive me. I jumped the gun here, guys. Mistake. Okay. No gift funds allowed. So in other words, for this person that is buying a house, they're buying it for themselves. They have no gifts from a family member. If there was a gift, gifts are likely, they're deemed more prompt for primary residences, right? Because, you're giving a gift because you're buying your first house. So I'm going to give you a gift. A family member is gifting you. So that's acceptable. But in this case, here's a second home and investment. We don't allow gifts. Okay. So the money must be absolutely yours. It must be seasoned and sourced, and it must be in the US for at least 30 days. Okay. But yeah, there you go. For national guys from Brazil, amigos do Brasil que tem negócio aqui nos Estados Unidos, por favor, entre em contato comigo. Eu posso trazer para vocês o financiamento para for nationals, para comprar sua casa de vacation, seu investimento aqui no Brasil, aqui nos Estados Unidos. Eu posso facilitar para você. Entre em contato comigo assim que você tiver uma chance. Eu posso esclarecer um pouco melhor para você em português. Eu falo português. Yeah! Guys, I'm sorry. I had to throw in some in Portuguese, Maybe I should also say Spanish, but I'm probably going to embarrass myself. Forget it. But the second product that I want to bring to your attention here, okay, is the bank statement product. I'm going to have all the people here that are listening to me, all the real estate agents, my friends that listen to me, all my customers that are self-employed and have not been able to purchase a home yet. Yes, as you probably already know, being self-employed is quite difficult to get a loan because the way they look at your tax returns are different from a wage earner. Okay, so you're 9 out of 10, you fail to be able to purchase a home because the way you declare your taxes. So self-employed individuals, my friend, bank statement mortgage program is the perfect option for self-employed borrowers who need alternative method to show the true cash flow of their business. Borrowers do not have to own 100% of the business. So if you do not own 100% of business, you're partner of a business, okay? You don't have to be scared. We're gonna use a math to be able to equate to what your income is gonna look like. But now we can use bank statements from your business for you to finance your new or first home, guys. Listen up. This is huge, okay? I don't know how long it's going to stay here, but loans up to $3 million and a minimum of $150,000. We can do 12 or 24 months business or personal bank statements to prove your income. Not your tax returns, not your wage earner, your W-2s, not your pay stubs, just your bank statements. 12 to 24 months of business or personal bank statements can now be used to source your income or prove your income. 2 years seasoning for foreclosures, short sale, bankruptcy, or deed in lieu. Okay, so even if you had a foreclosure in the past, even if you had a short sale or bankruptcy in the past, as long as it's been 2 years, we can do bank statements for you. Yes. And guess what? The credit scores are as low as 600. So if you have 600 score and you have, what's the LTV here? 10% down payment. It is oh my God, it is a 90% LTV. And forgive me for screaming. I know I blew up some of your ears. Forgive me. I am sorry. It's just I'm getting excited here. 10% down payment. Your score is as low as 600 or starting at 600. We can use 12 to 24 months business or personal bank statements. And what is the difference between the 12 and the 12 and the 24, the 12 and the 24 bank statements? Well, it is going to be pricing. Your interest rates will be better if you show 24 months. So in other words, what they're looking for is consistent deposits in that account that can equate and it looks like it is your income. Okay. Not the $1 or $2 over there that you deposited in there. They're going to look for amounts that are consistent to the business, consistent every month for the past 12 months to 24 months to be able to qualify as an income from your bank statement. Okay. The rates are 30 years fixed. We're not throwing any arm loans at you. Okay. So don't need to be scared. 2 years self-employed is required. So you need to be 2 years self-employed already. Borrowers can own as little as 50% of the business for business bank statements and 25% for personal bank statements. Purchase and cash out or rate in terms. So if you're in the bind and you're trying to take advantage of lower interest rates, and this is the time to cash out of your home, you can use 12 months because some of you may be stuck on a loan with equity that you need to use to save your life or your business. Yes, you can do it through this program. You give me a call, we'll get it done for you. Owner occupied, second homes, and non-owner occupied. Guys, come on. And this program is similar to the 1099 option that is also available. So if your bank statements don't work, we can use the 1099. We'll figure it out which one has the better pricing for you. It is also available at 40 years fixed interest rate only. Wow, which is kind of like the 1099 that I've on a previous show I've laid out for you. Yeah. Guys, please call all real estate agents. Call all your buyers, your self-employed buyers that you couldn't finance it a year ago or just recently. Call all of them. Buyers or sellers for that matter. All of you guys that had problems because you were self-employed, you couldn't show enough income in your tax returns because the way you declare your taxes. Use the 12-month to 24 months bank statements, guys. Give me a call. Let's do this, guys. Most loans will be qualified on expense factor of 50%. Companies with the lower expense factor will require a statement from a third-party CPA or tax preparer. Some industries with traditionally higher expense factors will be with a 70% expense factor. We can go in more details to each individual here. And non-warrantable condos are also allowed, guys. Non-warrantable condos are also allowed. So if you are in a state like, for instance, Orlando, or like Florida, forgive me, near the city of Orlando, where there's a new high-rise building being built there, and it's non-warrantable, it's brand new. I think you probably have to wait until it's already 50% sold for primary residence, and then you can go ahead and finance a condo in Florida, new building or whatnot, or even Brickell somewhere, new buildings. Okay, so non-warrantable condos are allowed in this product as well. But again, oh my God, guys. This is not a stated income, which is literally destroyed the economy. I know it did. I was there when it happened. We're not, this is not a prime product, a subprime product. No. I mean, Yeah, we go as low as 600. I don't think it's a little, 600 is okay. It's not subprime. Subprime, I think, is 580s, 560s, 550s. That's when that's what we were doing. We were doing stated income subprime back in the days. And horrible. Hated it. Just, some people just can't afford it. I mean, I'm sorry. It's just, we rather you do a little bit better and then we buy a house, man. We're not discriminating you. We want to give you a chance to own a home. But if you were to consult me and say, hey, this is my financial situation here. What does it look like? Should I buy? Should I not buy? Does it look like I can afford it? And some people can't, man. I mean, just wait a little bit, work a little harder, get a little bit more money pumped in, save up more money. You know what I mean? And then you get there. The stated income is just, people were just lying on it. You know what I'm saying? They were lying. So they ultimately couldn't afford a house anyways. I mean, one of the reasons why their scores were so low in the first place, they couldn't afford any of the loans they had. And yet we're allowing them to buy a house. I mean, I want to see your comments out there, guys. If anybody has a comment about that, I very much like to hear it. I'm trying to go in here to my, I don't know how to exit this thing. Okay, there you go. I want to see if there's any comments about that. You already could see that you cannot afford the trade lines you have in your credit report. Your score is low, bunch of collections and bunch of issues that people that you didn't ever pay for. And then you give an option to that person to buy a house with stated income, lying income, the liar's income. No, boy. No, I hope that product never comes back. Yeah, I'm sorry. I hope so. Never. But 12 months, the 24 months bank statements, I mean, it's amazing. It's amazing. We know this to be true. A lot of self-employed individuals, business owners, have a problem in refinancing their homes. They're stuck in there. They can't cash out their equity to save their parents, to pay for medical bills because the way they declare taxes. And it's just, this gives you the ability to do it. Yeah, we're going to look at every dollar that goes into your bank account. We're going to qualify some. There's going to be obviously guidelines to see what are qualified deposits in your bank account. And base your sales price off of those income, right? You base your financing ability, the 90%, the DTI, the debt to income, based off that, those incomes that we qualify. So it's a great opportunity. It's a great opportunity. Jump on now, because these products, if they don't go away and they stay, likely the rates are going to be higher later, and it's going to be higher for these products. Yeah, I don't think the rates are going to be as low as a conventional loan, as low as an FHA loan, with much lower down payments, But one thing important to remember, that these non-QM products, particularly the bank statement product I just told you about right now, okay, they do not have mortgage insurance. You only give 10% down payment, not 20, 10% down payment, and you have no mortgage insurance. You're likely going to have to escrow, though. We're going to have you escrow for taxes and insurance. So you're going to have your principal and interest and your taxes and insurance all into one bundle where you pay every month, but no mortgage insurance. Yeah, I have every day. Look at this. And this might be an alternative for even those that can show tax returns and qualify with tax returns. I mean, yeah. I mean, if I have the same person, let's hold on a second. If I have a self-employed that declared taxes in a way that showed that they had enough income there, qualifiable income, taxable income, okay, they qualify for a home loan, but yet they only have 10% down payment, okay. If they go to conventional or FHA, they're going to pay mortgage insurance. So it's maybe worth it for you to compare. Allow me to figure it out if the rates are going to be, you're better off with a little bit higher rate, but no mortgage insurance, than the lower rate, but mortgage insurance you never can get out from. Which one is going to be better? Right? So that's something to consider here. Yeah. Isn't it lovely to see me every week on Wednesdays? You can see how my hair is. Have I cut my hair? Have I not cut my hair? How great my hair is. Yeah, you're just looking at myself in the screen here, and I'm like, boy, your hair is a little weird today. Look, you got a little thing in here. Yeah, you got to go back to your barber. Yes, Peter, I'm coming, Peter. Yeah, I have great barbers in Houston. I met two great barbers, and believe it or not, they're both women, but they only cut man's hair. Say that they only cut man's hair, and they're really, really, really good. Right now, I'm Peter is like next door to me. I'm going to Peter. Maybe I'll bring her on board sometime to talk about cutting man's hair. Yeah, if she'd be honored. Okay. Would be a pleasure to bring her in. But anyways, real fast, let me go back into my things that I wanted to talk about. This is, I think, the next thing that I want to show you real quick, and it's already been almost an hour, so I'm going to speed up a little bit more here. But I want to do show something I think my clients are going to appreciate. This guy is going to appreciate it. Okay. I think I brought up. I mentioned this book before. I think. And I've spoken about him, Mike Fallat, okay, the Inner Circle. I want to share a screen with his website, and then let him talk to you real fast. And I'm pretty sure that he's gonna send me some love later for doing this, okay? But yeah, hopefully you enjoy what I'm about to show you, okay? Hold on a second, and then I'll read for you a few things that I made notes from his book. Okay. I hope everybody can see this. I'm sharing the screen.
My name is Mike Fallat. I own the #1 book creation service on the planet called Dream Stories Publishing. I've been an entrepreneur since 2008, full-time entrepreneur since 2015, 2016, first-generation business owner, part of the Arete program, 365 driven. And I've been getting messages left and right about business development, starting businesses, how to grow it. And so I figured to put together something pretty cool here. It's called Mike's Inner Circle. And I want to connect you with my network. I've worked with over 200 entrepreneurs with their books, turning them into bestsellers. And these are the entrepreneurs that are all over the world doing big things. So what I want to do is connect you with them. And that's how good things happen to you and your business. And I'll also be doing every other week these little webinars that teach you something about business or about how to manage businesses, tangible, high level, low level business advice to help you, whether you're starting out or if you've been in the game for quite a bit of time. So hope you're interested. It's called Mike's Inner Circle. Join us. I'll see you on the other side.
There we go. Hopefully you guys could hear the sound as well. Maybe I hope you did. But anyways, yes, this is his book. He created this Inner Circle. I try to join him his podcast as much as I can, and sometimes I miss it, sometimes I'm in it, and every time he brings a lot of value to his Inner Circle. To join, all you have to do is go to mikesinnercircle.com. Join Inner Circle newsletter by just putting an email here, or by purchasing one of his books, you get into the Inner Circle. Just follow here. Look, get a copy of the book, which I have in my hands, and I'm going to quote you a couple of things. Very worth it, guys. Very, 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 very worth it. Oh my God. Did I share this? Maybe I didn't share this. Oh, guys, I did not share it. Oh, something went wrong, I think. Oh, Jesus. Okay, let's do it again.
My name is Mike Fallat. I own the #1 book creation service on the planet called Dream Stories Publishing. I've been an entrepreneur since 2008, full-time entrepreneur since 2015, 2016, first-generation business owner, part of the ROTA program, 365 driven, and I've been getting messages left and right about business development, starting businesses, how to grow it. And so I figured to put together something pretty cool here. It's called Mike's Inner Circle. And I want to connect you with my network. I've worked with over 200 entrepreneurs with their books, turning them into bestsellers. And these are the entrepreneurs that are all over the world doing big things. So what I want to do is connect you with them. And that's how good things happen to you and your business. And I'll also be doing every other week these little webinars that teach you something about business or about how to manage businesses, tangible, high level, low level business advice to help you whether you're starting out or if you've been in the game for quite a bit of time. So hope you're interested. It's called Mike's Inner Circle. Join us. I'll see you on the other side.
There you go. I hope that worked. You might have probably listened to the audio twice. But anyways, I have this book. I'm part of the Inner Circle. I have already gotten quite a bit of value from this gentleman. Okay, so mikesinnercircle.com. You can get more information about it. And every week I'm actually reading a little bit of notes that I made in books that I read. And you can see here, he writes something to you when you buy his book. That would be awesome. And there you go. The first one I want to say, and this is pretty cool too, because I think this book was based on everything that he learned from his inner circle, his millionaire circle. And then there's some good takeaways here. Very good and simple, easy read, and to the point, to things that you want to know. Okay, so the first thing I got here was, in order to send out, you have to in order to stand out, you have to do something that other people are not doing. Yeah, I mean, being different, right? You have to be different. Social media is a sea of noise, which is just a representation of the world. Yeah, so yeah, you probably already know this. There's no way these days for you to be very successful unless you have something unique. It's either something unique personality-wise or a product that is unique enough to go viral on social media. So being different is very, very, very important, right? Copying people does unless you're doing the basics, I guess, but it's not recommended. Staying busy, it's another chapter of his book, and it says here, being busy equals relevance. If you're busy nonstop, it may feel like you are spinning your wheels for a very long time, but eventually it will get down to the very core dirt of something and you are going to catch. Without the wheel spinning, you will never catch. The more wheels that you have spinning in the mud, he likes his motorcycle on that mud, I bet. That's getting his analogy from Mike. And according to the law of numbers, something has to catch. So yes, I always say that it's a numbers game. The more people you talk to, the more the better the chances are from that one person develop into a business. Okay, so we're talking about businesses here, but even for those that have had issues in making friends, if this is a personal thing and you're watching this for your personal means, and you don't have a lot of friends and you're feeling lonely, the more people you make yourself exposed to, the more people you talk to, the better the chance that you're going to get to meet as someone else new in your life. Don't feel lonely. Call us at any time and subscribe to my channel. I'm here to always to support you and answer any of your questions about real estate and even life. Please. Let's see here. Another one. Just one more thing. Just one more. Just more. Okay, here you go. In the chapter of purpose, he says, purpose is the driver. The ones who do not have it are lost in the woods. Again, man, This book is all about you, that Mike. I saw you in your motorcycle and you were in the woods, it looked like. But that was cool. The clearer you are on it for your life and your business, that better chance you have at breaking through the barriers. Yeah, you got to have purpose. You got to have purpose. And while most of us, purpose is our family, I think, today my yard guy, he's a very, very godly person. And his purpose is God first, family second, and church third. I mean, you got to have some purpose, right? And then everything else for him. You know what I mean? So you got to have purpose in order to be successful. There's no way out of it. There's no way out of it. How else are you going to be motivated? Right? As long as the purpose is a good one, right? Good purposes, not bad ones. Okay. What you learn must be taught with ease. So in other words, I like that, Mike. I really like that. I think what he's saying is that if you're going to develop a business, if you're going to create a new product or a new idea and become successful with it, have an extreme amount of success with it, you need to be able to make it so that it is learnable and it is, and you can replicate it. I think that's what I got from it. I mean, eventually you're going to hire staff, you're going to hire people that's going to work under you. So if you don't have a process that is just as good for the people you delegate work to, then you're likely going to have an issue there. So create simple solutions for your new ideas, your new products, your new business, where you can duplicate it. I mean, franchises, it's the only way they were able to do it. Franchises, science behind their product is that you can easily copy and paste, and just anybody can take over. Of course, you offer training and whatever, but that's what franchises are like, right? Where you created a product that is amazing, and in order for you to be able to duplicate it and make it better and expand it even more and allow others to profit with it as well, you need to make it easy enough. Okay. But that's it, folks. I had a good time. It's been a little bit over an hour now. And I know there's some people tell me to go a little shorter, and I tend to go for an hour. I talk a lot. I know. I'm sorry. But some of you like it. Some of you don't. I mean, it's okay. Maybe you turn off half of the way and don't listen to the rest that I have to bring to the table, or you speed up. Let's go to the most relevant things this guy has to say. That's fine. That's fine. It's okay. I'm okay with it. I'm okay. Do what you need to do to be successful. Do what you needed to do to absorb as much information as possible from me, and hopefully I maintain you entertained. I'm not always funny. Maybe I am. Maybe I'm not. I know I'm not that pretty or handsome, but hey, I love you guys. And listen, please, again, support me. Just go to my channel, subscribe, say a like, no like, you suck, whatever. Okay. And like always, Wednesday, noon, I'll be here for you with more real estate information. And oh gosh, I was going to present something else, but next week. Next week, I'll put something out for you guys. All right. Thank you so much. Have a great day and stay safe.